the macro situation is very complicated right now. World events, geopolitical tensions are creating a lot of complexities on what was before a more stable market. Most recently, we've seen the impact in China and the 6% growth year over year that had been running so smoothly in China for the rest of the world. That demand is dried up to a large extent, right? But the supply was still there and still coming. So we continue to have an oversupply. Demand is down. You've got what I'll call deglobalization taking place around the world. You've got markets like in Europe and in the U.S. in particular, where they're basically putting up trade barriers, right? Trying to manage their economies. And that impacts all of the rest of the downstream markets, right? So for Saudi, I think the opportunities are probably a little bit better because this region is a growth region. You have growth in India, you have growth in Africa, you've got the continued production, quality production that's taking place in region. So while some of the transportation problems are creating global chaos, the region is able to move around it a lot easier. So I think it's somewhat of a mixed bag. Depending on where you are in the world, you're feeling the pain a little bit differently. I like to think of these issues in the macro sense, right? And it always comes down to people, right? It always comes down to people. And while on the one hand, you can take a look at, production requirements, manufacturing, and all the rest of it. There are two different worlds evolving right now around the demand of the materials that come out of base oils. And the Western world, the Americas, the European countries are feeling like they need to reduce their use of these carbon-based materials, right? But large segments of the world haven't even started to catch up, right? Thus, I mentioned earlier, Africa, South America, the Southeast Asia. These parts of the world still are demanding increased use of these raw materials, right? So while they're part of the global ecosystem, I think they will continue to drive demand. As they become wealthier, demand will continue to go up. Perhaps some of it will shift. But in the short term, there's not enough demand to meet the supply. So everyone is struggling. A lot of the petrochemical companies are feeling it on their bottom line. And the reality is for most of the Western societies, right, they want the best, newest, flashiest, highest energy consumption products on the planet. So their desire for the very things that then they say they want to reduce doesn't add up, right? So consumer demand will be back. When you think about the actual prices that the companies can charge for their product, the opportunity for increasing profits is not looking good, right? Their costs continue to go up, and the demand is just not there. So they're having to fight for market share, which typically results in prices going down even further. Obviously, we know that that's not sustainable. So at some point, something is going to have to happen. In situations like this, it sometimes creates opportunity for mergers or acquisitions. As companies get squeezed, they become acquisition targets. And if you're cash rich, these become wonderful opportunities for investment. So perhaps we'll see an increase in mergers or acquisitions while the cycle continues to be low. And help me out here if I steer too far off the path here, Vina. One of the biggest drivers is going to be the price of a gallon of oil, right? A barrel is had dropped to just about $70 a barrel, $75 a barrel about 2 weeks ago from a high of 100 a year ago. And when it's at 100, everyone's happy, except for the folk. Well, yeah, everyone's happy. Then when it drops to 70, the folks in what I'll call the green economy get nervous because the economics don't stack up when oil is cheap. We've seen over the last week, again, changes in geopolitical situations, and the price of oil is back on the increase. How long that will go is anyone's guess, I suspect. But outside of the price of oil, I think currency fluctuations continue to play havoc in the regions. Japan just saw some recent stability after dipping quite low, but I think the economy has gotten straightened out. The U.S., the debate is still out as to whether or not there's going to be a soft landing or a hard landing. I met last week with a company that is a food commodities PRA. And so they're into soybean, corn, and feedstocks, and beef, all that kind of stuff, chicken. They think we're in for a recession. It's coming. So they are not bullish at all about the future. The price of food's going to go up, and that will affect every kind. Absolutely every kind. Oddly enough, the U.S. reported the highest growth in jobs last week. Massive job growth. Where and in what sectors, I don't know. I suspect it's in the service sector, which probably won't translate to much in terms of real economic growth. So as we heard here at the conference from the presenters this morning during the roundtable conversation, transportation, logistics are a challenge right now. And it's adding a lot to the cost. And this is something where new technologies, generative AI and general machine learning is going to help them become a little bit more efficient on where they place their resources and how often and where they need to start building capacity locally until global transportation routes get stabilized. So this is our first year in Riyadh for the conference. The last 2 years we were in Jeddah. As you can see from the attendance, we got a nice crowd here today. We have more sponsors from the exhibitors. We had the patronage of the ministry, which is always nice to see, right? That helps. So we're hopeful that as we continue the conference, we see increased attendance. We launched today globally Ask ICIS, and this is a big deal for us because we've taken all of our data and assets, and we're now making them available through this platform where people can come in and ask questions and query everything. So I would encourage you to go out there and check it out. There's a booth over here, right? And it's just the beginning of where we're going to go with this. It's not just about asking questions and getting answers. And you guys have been on Gen AI, right? You get the prompt questions that come after it. We're going to take it a step further, and it's actually going to engage in a cognitive conversation with you. You ask a question, it will ask a question back, and then drive a dialogue between the user and our data, almost like a live consulting service, right? To actually help you solve your problem, not just ask questions and try to sort it out from the responses that come back. So we're really super excited about where it's going. And it will, in the future, not just use our data, but we are now in the process of onboarding other data partners. So when you ask the question, it's going to be drawing on information from other companies, not just ours. Other price report, like this food commodities company I mentioned earlier, they'll get on board. We'll have transportation companies. You'll be able to get answers back that include metals, biofuels, wood, everything, right? So it's going to be an amazing ecosystem of information, a one-stop shop for anyone who wants to solve the world's problems.